Hello and welcome to Business Today Television. I'm Siddharth Zarabi, and joining me now, the man for the moment, Dr. V. Anantha Nageswaran, the Chief Economic Advisor, who has just presented the economic survey, India's 18th Chief Economic Advisor. Sir, the first question right up and central, and several have been asked of you, but what I really want you to tell our viewers is your own assessment. Is the post-COVID recovery complete now?
Yes, I mean, you look at the actual growth outcomes, 8.7, and estimated for this year by NSO is around 7. And then you take a look at, for example, the projections made by many international organizations. It is either somewhere in the region between 6.1 to 6.6%. And next year, according to the IMF, 24-25, talking about the year after the next financial year, 23-24, 6.8 in 24-25. So clearly, we are now putting the recovery from the pandemic behind us and looking ahead to a period of what the trend growth will be. And many people are projecting that the Indian economy will grow at a trend rate of 6%. That is what their projection is. All I'm saying is the trend growth is probably higher than that. And that is because of the fact that India has done a repair of many balance sheets, banking, non-banking, corporate. And second, the public digital infrastructure that we have put together is also creating opportunities for many micro and small businesses to grow. So taken together, these two developments, which were not there in the last decade, the cleaner balance sheets and public digital infrastructure together will give us a higher growth rate than the trend growth of 6%, which is what is there in the projections of many organizations and the private sector. That is the highlight of the survey.
Dr. Nageswaran, what gives you as the CEA the confidence that we will grow at 6.8? Although, let me tell our viewers, the estimate is 6 to 6.8 with a baseline number of 6.5%. We've been talking to others in the field, and they are saying the scenario is more likely towards 6 rather than 6.5 or 6.8.
No, I think, when it comes to these point estimates, we need to understand that economic forecasts are at best conditional statements. You make certain assumptions. Obviously, when these assumptions, if the assumptions materialize, hopefully your forecast will materialize because it is subject to so many influences, domestic, external, etc. That is why the range is important. We have also acknowledged in the survey that the downside risks are slightly higher than the upside to our baseline number of 6.5%. However, if some of the adverse developments that could come, if they don't come, such as higher commodity price, further interest rate increases in the United States, and further strength in the US dollar, and overall cost of living increases in the Western world, leading to higher rates and higher commodity prices translating into a higher import bill, etc. If those kinds of things don't materialize, then I think the chances of us achieving 6.5 or better increase. So that is why I said economic forecasts are conditional statements. We just need to understand what the overall trend is, and numbers give us a false sense of precision.
Okay. You spoke about the downside risks, and that is a point well taken because we live in a significantly uncertain global macro environment. And many of the things that we have witnessed post-COVID, there are lingering effects. What are the positive upsides as far as the Indian economy are concerned as you look ahead into the year?
No, I mean, the positive factors are what I mentioned, which is that the momentum in the economy is still good. Second, credit growth is in double digits. And if you look at the purchasing managers indices, they are in expansion territory. And if you look at the first half GDP growth numbers, private consumption and capital formation are doing quite well. And private sector capital formation, based on data they submit in their earnings reports, is also higher than what it was in the previous financial year. And overall exports, both goods and services together in the first 9 months of the year, is running at 16% above the previous years, April to December 2021. So I think if you put all these things together, along with the fact that corporates in general are feeling confident, and unbeknownst to us, which we are so far not measured rigorously, the contribution that is made by digitization is increasing formalization and financial inclusion, contributing to more economic activity and also efficient economic activity. All these factors are positive drivers of economic growth, not only in the present, not only for the next financial year, but beyond as well.
Infrastructure and a capex boost, and the government has really taken on a lot of the sort of responsibility in that regard. You also made the point about private investment. What will be the mix? I mean, not the percentages, Dr. Nageswaran, but really directional terms of future growth drivers.
In terms of government spending? Oh, I'm sorry, I didn't get the question really.
Government and private, what will drive growth in the year ahead?
In terms of capital formation or investments, you mean?
Yes.
Look, public investments, both the center and the states and public sector enterprises put together have been rising. And according to data, if you take all these three entities together, central, state governments, public sector enterprises of the union government, I think from what I gather, if I recall correctly, they have gone up by about 2.8 times in the last 8 to 9 years. And that is a very big jump. So naturally, I think what will happen is the momentum will now shift to the private sector because they have strong balance sheets, good profitability, and uncertainties are there, but fading slowly. So ultimately, we need both public and private sector to invest. Just as we say in the global context, the emerging and developing economies need concessional financing, non-concessional financing, private sector financing, etc. In the domestic context as well, we need both public sector and private sector investments to continue to happen. And which proportion will they be depends on the economic cycle and the context.
Dr. Nageswaran, if you could tell our viewers about what the survey and you yourself foresee with regard to how inflation will pan out. We have seen the backdrop, we have seen a massive spurt in global inflation. It's not just India, but India seems to be better off relatively versus many other economies.
No, you're absolutely right. India is relatively better off. Our inflation peaked at 7.8% in April 2022, and since then has come down and stands at 5.72% in December. And our target range is 2 to 6. So our deviation from the target was not as big as the deviation from the target is for several advanced economies even today. And if indeed global economies experience a slowdown and commodity prices are well behaved in 23-24, then India's inflation rate will continue to come down and maybe even come below 5% and get closer to the midpoint of the RBI's target range of between 2 and 6%.
By when, sir? By when would you expect that to happen?
We don't have our own forecast. We go by the Reserve Bank of India's forecast. Reserve Bank of India predicts that the inflation rate will come below 5% in the first quarter of the next financial year, and we have no superior model to second guess what the RBI is putting out here.
Okay, my final query to you, and this is to do with something that you have said earlier, and this is to do with how large India's economy will be by 2030. If you could please expand on that for our viewers.
Look, I mean, these are, again, as I said, with respect to the earlier question about GDP growth, these point estimates are an interesting exercise, but of limited utility. They give us some sort of a rough idea of where we see things, but they cannot be taken as precise proofs or precise guidance, because ultimate outcomes are subject to many factors beyond our control. So if we look at the numbers, $3.5 trillion will be likely size of India's GDP by March 2023, roughly thereabouts. And historically, over the last 30 years, India's dollar GDP has grown at a rate of 9% in spite of rupee depreciation in these 30 years. And there are episodes when the rupee has strengthened, and in those periods, India's dollar GDP has even grown at double-digit rates, like, for example, in the first decade of the current millennium. So, in general, if we take a 10% growth rate in dollar terms, because let's say the US interest rate cycle peaks at some point and dollar strength also peaks at some point, which probably it already has, then we can look ahead to 10% growth in India's dollar GDP. And in general, when you grow at 10%, the value doubles in about 7 years. So if, subject to a lot of assumptions, if India's dollar GDP grows at 10% per annum from 2023 April onwards, by 2030, you could be looking at a $7 trillion economy.
Okay, and that $7 trillion economy will be a very, very significant milestone. As I leave you, Dr. Nageswaran, a quick question, and I know you can't talk about the budget. I'm not asking you about the budget, but for our viewers who've been debating populism versus fiscal prudence, will I be right in saying that a fine balancing act is what is really in store?
I am waiting to find out as much as you are tomorrow. We will know tomorrow.
All right. We will get to know that, and we'll hopefully be able to speak with you again. Dr. Nageswaran, thank you very much for your time with us today. That was the Chief Economic Advisor telling us the key highlights as far as the economic survey, which is really a 9-month report card of the Indian economy for the current year is all about. If you've been watching, thank you very much. Goodbye.